Talk more about the markets now, specifically what options are saying about equities. We love doing this. We have Amy Wu Silverman, head of derivative strategy at RBC Capital Markets, and it's always fun when the tail does some of the wagging, isn't it? And
it's definitely wagging.
At your own, and ignore it at your own risk. What is it telling us right now overall?
So I would say a few things, and I would say right now investors are kind of facing this sentiment whiplash, Joe. The GameStop news is certainly going to trigger that even further. But one thing we had seen probably in the last month since earnings had happened was the right tail had actually been sucked out of the market. So that exuberance that we associated with.
We talked about that last time.
Yeah, FOMO, MOMO, that had been associated with AI, even though NVIDIA itself has done well, we actually saw that right tail sucked out of the market. Now, it looks like we may be triggering another meme frenzy. Who knows if that stays? But that idea of that sentiment whiplash that we've experienced in the options market is something that has been very prevalent this year, and it's been keeping investors on their toes.
I can't remember the nuance of last time, too. So some of that had been taken out of the market, but was there still no hedging on the downside or something?
So that's also changed. So we kind of talked about the left tails, your downside protection being a little bit asleep, people not focused on hedging at all. That has actually slowly started to tick up. I think part of it is we've had this earnings season that people were kind of waiting to finish. We're facing kind of a summer of more macroeconomic news and obviously the U.S. election cycle. But you've seen a noticeable tick up in skew, so that pickup in demand for puts across the indices like S&P. And that's telling you that people are starting to get a little nervous under the surface.
Because there is a little bit of divergence between the NASDAQ and the Dow, at least. The S&P too, last week?
Yeah, and look, this comes down to how the meat is made, right? So in the Qs or, in the S&P, it's that component weight of your AI stocks, of your NVIDIA, of your Apple, and then obviously that filters down on the ETF level too. But essentially, you're starting to see people make bets overall that say, look, we're a little worried about the turn. And then obviously, positioning-wise, people are just more long. So there is just simply more to hedge. We can also create this function of a steepening skew.
Because I can paint kind of a bearish fundamental picture that makes me wonder about how fast and how far the market has come. And it's based on sticky inflation and slowing growth, which is, neither one of those is very positive.
Sure, and then I think someone on the contrarian side could say, well, PCE was better than expected, and this part of the consumer base seems more resilient. I think the nuance on the option side is that the left tail is fatter. And what I mean by that is we've thrown in a lot of these unknown unknowns. I think kind of the prosecution of the U.S. election cycle is going to be one of those unknown unknowns, particularly with the outcome of the trial. And so when those left tails are fatter, I think folks who focus on the risk itself and that probability, that's why they're starting to go to these put options.
I'm trying to think whether that's a real thing, an unknown unknown. Is it?
Yeah, you don't know what you don't know versus you know what you
don't know.
An exogenous risk, if you will.
Okay.
I think investors are good to some degree because it's kind of quantitative to say, okay, what does PCE imply to the Fed rate curve? But how do you prosecute something like, what do we do with an election cycle where potentially one candidate is in jail? Or potentially there's a court appeal going on something else. So it's these like geopolitical risks and political risks that I would say the market itself is worse at quantifying, and that's why your left tail gets fatter.
I mean, every day that we read the headlines, we read it like it's like normal, but we've never seen a lot of this stuff before.
Yeah, and it's one of those, you don't like to say unprecedented, but it feels a little unprecedented. And the way that gets mirrored into the market isn't through the stock market itself, it's through kind of the rising of these tails. So that left tail steepening to me is this idea of there are all these things that we can't factor. So, like our median line is still things are going to be fine because we look back in history and that what has happened. Yeah. But then these exogenous risks are shocks that we somehow have to bake into the system.
It is amazing. We've seen wars, we've seen terrorist attacks, we've seen all these things in the market. It's like 2 days later, it's like back on. It's very
short-term memory.
It's crazy.